Okay, so today's Thursday in Australia, and it's the Anzac Day. All right. So if you look here, it says Australia Anzac Day and New Zealand Anzac Day. So you can have a look on um, on the Aussie dollar as well as the New Zealand dollar. They are a little bit slow today. Okay, so if you look Aussie dollar, they haven't done much. So here Thursday, they've just actually they did move quite a lot. Look at this. So from the bottom to the top, that's a big move for the day it is. It's usually more slow market, but today it's kind of different, let's say. Um, and then we have New Zealand dollar, whereas in the USD, here we go, moving quite a lot as well from Thursday here to there. Oh, wow, that's a big move actually. Okay. Now, last week we've seen some crazy stuff happening, right? For the first time, we had the manufacturing PMI and the services PMI coming lower than expected. Okay, at 11:45, we had the release of the USA PMI, and we had 49.9 out of 52 on the consensus, and 50.9 out of 52. So there is a big drop, and most importantly, okay, I've always mentioned that. Okay, the actual came in lower than the consensus. That's fine. As it is, it's already very bad because the consensus was expecting something and then it came in another thing. So that's something that it's not pleasant. Okay. But then if we look here, okay, the actual was much lower than the previous as well. So what does that mean? Well, it means pretty much something like that. Okay, we having a up move, and then from the previous to now, it basically it's not worth anymore. So basically, all this move that has just been done on the previous, it's not worth anymore because the actual came in much worse than the previous. So it went below, and that's a lot of below from 51.9, so basically 52 to 49, basically 50. So this is basically 1.9 difference here. Okay. Same to here. This one is a little bit less. This one is so this one was 51.7 and the services was 50.9. So that's not a big difference, but it's still lower than the previous. Okay. And this did made the US dollar change directions. So if we look here on US dollar index, we can see from where is my pen here? I want white. Perfect. From here, okay, pretty much, sorry. So Thursday, Wednesday, Tuesday here. So from here to there, that's pretty much all the PMI result. Okay. So this is basically a result from the PMI. So this major drop here from the 106 to 100 all the way to now 105 600, it's pretty much because of the PMIs. Okay. Now if we look to euro dollar, I remember that I was talking about we may be initiating an uptrend, and I've mentioned that on Tuesday because we were breaking the highs. Look, there's a high here, there's another high, and now there's another high. So pretty similar, sorry, pretty easy to see that even though we had this massive downtrend, we were making higher highs. So now we are on an uptrend of the US dollar. Okay. So if you take off here from the 4 hours to the 4 hours, sorry, come back. Where are my potential targets? Well, there are some reasons, there are some ways you can have these potential targets. First one, it's more commonly used, is Fibonacci. Okay, so now that we know we are on an uptrend, you can come to the 1 hour. Let's say let's use here. Okay, let me take the Fibonacci retracement. Let's take this one here from the bottom to the top all the way to here. There we go. So the first target is on 07600. All right, let's call 07600. That's a Fibonacci way. All right, 07. Oopsie, sorry, 07600. That's the first target, and then the second target. Where is my target? Is here. Okay. Why? I've mentioned that so many times already. If we have a box, right, like this one, well, it's actually bigger. It's actually this, okay, because it was a consolidation on the top. And look, there's another consolidation down here. So usually those consolidation happens on the top, okay? So on the top or on the bottom. How can I explain this? Okay, so if we have, yeah, so if we have an uptrend, okay, if we have an uptrend or whatever, a downtrend going up like this, usually consolidates to change the way because all the orders that we're pumping into this uptrend is getting off on here. So the market don't have any more full fuel to go up. Therefore, the only way we could go is potentially down. Even the same thing happens when the market is down move and then it goes up. So the consolidation here indicates to us that they are profit taking these sells here, and now they're maybe initiating the longs to have another catch. Okay, so of course this is just an example. Market it's very different. In reality, it's very different. So we are on an uptrend of euro dollar. Okay, the first target being 107,600, and the major target, let's say, if you can call this the major target, the main target, okay, would be this one here. And it's so funny to see how the 2,618 actually match with the middle of the box. Let me delete if. Okay. And let me change the color as well. This one. Why is this one different? Should be fine. Okay, this one is a different line. There we go. Okay. So these are my two targets for euro dollar. So now you may be thinking, okay, but the US dollar is very weak. Yeah, they are very weak. Look, if we look to the US dollar index, it's just dropping. And we've changed it already. We've changed it. Look, the box here. See, the box is just here. So we've changed the trend already. So the trend is making lower lows now. Okay, so it broke the bottom. Let me delete all of these drawings. It break the bottom here. Break the bottom here, just here. Okay, went for pullback. Of course, it's a small pullback, but still, where could be the targets? Again, you can use Fibonacci in those cases. So let's start from the first leg. Okay, so from here to the top here. First target would be 105, 130. Okay, So this one, let me put it here, and 530. And, you know, look to the left. What do we have? Sorry. Look to the left. What do we have here? Sort of a box. Okay. But the main one is down here. Okay. Remember I had a short position on Tuesday on the euro pound. There we go. Okay. So again, why? Because we had this box here and I shorted here and here. All right. Unfortunately, I don't have my terminal login here. Otherwise, I could show it to you guys. But I've closed it. I've closed it half of the trade. Where is this brush? I've closed half of the trade here. Okay, so I had one position here. My biggest position was here. When the market retraced, I added another half of the position. And then the market came to this area. I closed it 50%, put the stops to break even. Then the market dropped and I've closed all of these ones. And then the market stays here like, oh my God, okay, I'm going to close. And then I close it here. Otherwise, it would be target hit a TP just down the bottom here. See? So I wasn't too patient on this trade. That was my mistake, I guess. One of the mistakes I've made because I'm a human and I do get things wrong. It's not 100% of the time correct. Otherwise, we would be money-making machines, right? But the best entry possibility would be on here, and I got one here as well. So this one was my biggest position. That was completely wrong. It was supposed to be here. And then I added it. So I got one lot here and then half a lot here. So 1.5 lots in total to here. It was okay, but you know, it is what it is. It happens. I didn't hold for too long because I was afraid of the GDP tonight. Anyways, so moving ahead, look at what is happening with GBP USD. It is nearly at the target I've mentioned on Tuesday that it's on the box here. Okay, and again, it's pretty interesting how the market is reacting. But the thing is, some people think that euro dollar and GBP USD are similar. That it's not. Okay, they do have a correlation, but charting wise, it's very different. So look at, for instance, on GBP USD right here. Just take a photo with your memory, right? Now let's go to euro dollar. Completely different, right? So see the structure wise? Structuring wise, they're pretty different, but they do move to the same side because of the US dollar being weaker. Okay, so don't forget that. All right. Don't try to trade both of them. Sorry, GPUC. At the same time on different directions because they do move for the same direction, but not only on the same structure of the market, and that's completely fine. Okay, every market has its own nature. Okay, let me take this one off. There we go. So let's get the Fibonacci tool here again. Okay, so we have, this one is a bit tricky. Let me see if I can show you how I watch it. So this is, so we came from this drop, we've made a pullback, and then we've broke this pullback again. Okay, so sorry, we broke this low here from the pullback. Now we are up again, but we broke the top of this pullback. All right, that means that now we're making higher highs and higher lows. So supposedly what we could do here on the Fibonacci is we take the Fibonacci and we measure from this side here, let me go a bit down, to the last pullback to here. But remember, this is not 100% on this one because we didn't actually had the pullback yet. Okay, Or what you can use is see the last move. So see from here to here. Oops, sorry, I made a mistake. There we go here. So from here to here, and we can sort of calculate what are the pullback expectancies. So from the top to the bottom. So now this is very risky. Okay, why? Because we are sort of we think that this is when the market will become to retrace, and we are believing that it will retrace to 38, 50, or 61. So what do? We take the Fibonacci and retracement, and then we put on 38, and then 50, and then on 61. Okay, but the best scenario here on pound dollar is the box. Okay, we have one here, and we have another one on the 4 hours. I know that. We come back. We have a bigger one here. Okay, on the 4 hour. So my opinion is GBPUSD will continue to escalate higher. Okay, let me take these drawings off. There we go. So major target being this one, and lower target being this one, right? So the minor target being 125, 500. We can say 500. Oopsie, there we go. And the bigger and the major target being 1265. Okay, so this is my analysis for GBPUSD. Now, why am I believing on a higher pound dollar and a higher euro dollar? Well, just today we're going to have the GDP from USA. Okay, Thursday here. There you go. So we're going to have GDP quarter over quarter, and we're going to have the initial jobless claims. Both of them are very, very important. Okay, and they're going to be at 10:30 p.m. in Sydney time. Right now is 7:30, 7:35. And I'm expecting it to be lower, higher. Okay. I don't know if you guys heard my video on, when was it? Tuesday this week? No, Wednesday, yesterday. So I've done a video yesterday talking about the GDP. As well on Tuesday. I've talked about Tuesday and Wednesday. I think it was on Macquarie, no, Goldman Sachs. Goldman Sachs was having some analysts predicting a much higher GDP for US. All right, from 2.5, they were expecting 3.2. Now, this can happen. Yes, definitely can happen. Would that impact the market? 100% would impact the market. Why? Because the market is expecting at 2.5. 3.5 is higher than the previous, of course, higher than the consensus. That means is even though we have GBPUSD very close to the targets here, it would completely change our view. Okay, and if we zoom out, and it would completely change our view and just continuating the downtrend. Okay, is this possible? Yes, that's like 100% possible, you know. And then we would need to be able to take some short positions where we feel comfortable. Right now seems like a good spot on pound dollar, a good resistance. Previous support here, broken on the 11th of April this month. So pretty interesting here. Okay, so just pay attention today's tonight, in a few hours, actually a couple of hours, we're going to have the GDP. All right, one thing I want to show as well is GBP/JPY. Does anyone have a clue on what is happening here? I just want to know, what do you guys think about that? Is anyone trading it? Send me on the chat. I want to know if anyone is trading GBP/JPY. No one? Okay. Anyways, so last week, Suzuki is the guy from Bank of Japan, issued a rare joint statement with the U.S. Treasury Secretary Janet Yellen and the South Korean Finance Minister Choi Sun. I think that's how it pronounced his name, Choi Sang-mook, in Washington. And they stated that they would continue to consult closely on foreign exchange developments between those three countries. Okay, so from US, Japan, and South Korea. All right. The three nations, they also acknowledged that the serious concerns felt by Japan and Korea over the recent sharp depreciation of their currencies. If you guys didn't know that, but Japan spent around $60 billion intervening in currency market in September and October of 2022, when the yen approached the 146 and 152 level. So if we look here to the 146, oh, there we go, it breached through. Let me take this one, 146. And let me put into a purple. So we go below here. There we go. So 2022. Oh, let me put this on the daily chart. Otherwise, we're going to be going there forever. This is 23, 23, 22. Okay. So the 146, there we go. So the market was coming all the way here. And then on October, here we can see down there, Monday, 24th October, the Bank of Japan started to intervene in the currency market, and they spent $60 billion to 146 and 152 level. Okay, so basically here and here, and they've made all this decline on Forex. Okay, and then pretty much later it just came back to the normal again, to the same place where it came from. But anyways, so as I was saying, serious concern means nothing, and nothing means without no actions. Okay, there's nothing has been taken yet from the past intervention in 2023 last year. Given how much traders have focused on intervention risks in the past few weeks, it's very easy to forget that this is an extremely unusual event. Okay, this is a guy called Simon Flint said this, and this is what I'm actually seeing from lots and lots of analysts. You know, oh my God, the Bank of Japan will intervene again, and everything's gonna collapse. Mate, they spent $60 billion in 2 months. All right. In September and October last year, 2022, do you think they are ready to issue another $60 billion worth of inflationary things on the economy? I don't think so. So the market is crazy about, okay, the Bank of Japan will definitely do an intervention. Mate, calm down. It's not like making a bread, you know? It's much more complex than that. Anyways, so the risk is that the MOF comes in too little or too late, and it will cause further reduction in confidence domestically and future, and further build it up more short positions on Japanese yen positioning globally. Um, this is a guy from the HSBC team said in April. Okay, and there are all the risks, all the key risks on the Japanese yen recovery view that the Fed does not cut rates this year. So if the Fed doesn't cut rates this year, Japanese yen will be a trash. Okay, no one will want it. No one. Do I think that the Fed won't cut the rates? Look, if we come to the CME, okay, let's just go here pretty quick. Wrong one. There we go. So if we come to the Fed Watch 2, I've showed this to you guys multiple times already. Let's go to June. And look at down here. Oopsie, sorry. That's not what I want. I want the black one. 525, 550. Everyone knows here that we are on 525, 550. All right. So you can see here current target is 525, 550. So for June next month, sorry, not next month. We're not in May yet. So June, we will have no possibilities of rate cut. Okay, that's good. Let's go July. 56.5, still not expecting a cut. These numbers can change every day, guys. All right, be in mind. All right, that's fine. Let's go September. Oh, all right. Now 46% of the market is expecting a cut. The first cut of the Fed that was supposed to be in March on September. All right. In September, they are expecting a cut from the Fed that was supposed to be the first one in March. That's a big change, isn't it? But remember that a few weeks ago, the June rate cut was 70% priced in, all right, on the overnight swap rates from the Fed. And now it's only 16.4%. And there's 0.5% expecting actually a 50 base points cut. It's crazy. Okay, September, 25 base points cut. And then November, wait a minute. So why is the 18th of September expecting 46.3% of 25 base points cut from 525 to 5? 7 November is expecting the same thing. Interesting, right? And what about 18th of December? Exactly same thing. So guys, the numbers are in front of your eyes. You just not want to see. All right, it's right here. Do you actually believe they will cut 3 times? Of course not. All right, I do believe on one cut, most probably. All right, one cut, most probably. When? I can't say. I don't know. It could be in September. It could be in November. It could be in December. It could be in May. It could be in July. It could be in June. I don't know. But mostly sure I'm expecting one cut. All right. But as I say, if they don't cut, this will build it up much more risk to the Japanese yen recovery, and it will be crazy. Okay. The Bank of Japan, the board indicated that they are in no rush, right? In no rush in terms of the PN, the policy normalization. And while the Fed is expected to keep interest rates higher for longer, as we know already, amid these sticky inflation, um, this makes in turn this suggests to us that the Japan will stay for some time, which along with general positive risk on fails to assist the safe haven Japanese yen to attract any meaningful buyers. Okay, but for traders, it will only offer more opportunity to sell the currency at better levels, the Japanese yen, I mean. And at the same time, it makes some money, in options positioning. If you trade options, it's just the market expectations are expressed through options, and it does actually make a lot of changes on option flows, point to a solid potential further losses for the Japanese yen. All right. So, look, my conclusion on the Japanese yen, I know lots of you always ask me about the Japanese yen, is that without a very hawkish stance, or something more than verbal talks about an intervention from the Bank of Japan, I think the Japanese yen USD JPY could go now 257 and then 160, where I've mentioned that already. Okay, so if we come here, 157 and then now 160. So for the next targets, I would go for 157 and 160. All right. Now, when do I believe this can happen? Look, we've just broke a major support resistance at 155. We are making higher highs for the year. Maybe a pullback. Once it has a pullback, we could, look to opportunities in the market. Now, that's my biggest take here on the Japanese yen. Let me see. Someone sent a question. Can you check CHF if it could possibly go further up? Yeah, I've mentioned already about CHF last week. Didn't I? Yeah, these are my targets. 170, 171, 100, and 171, 571. Okay. I've mentioned that. Sorry. There you go. It didn't break the bottom. Right, it didn't break the bottom here. There goes to the same. Key. Broke the top. Just broke the top. Going to break the top now. After it breaks the top, this is the first target, 171, and then 171, 571. Jesus, 171, 571. Why is this? Well, just look to the left and we're gonna see the box. Okay, top of the box, and then top of resistance here. These are the reasons why I have those targets. Okay. Thanks. Not a problem, Irene. What else do I have to talk about? Gold. Gold. Can't forget about gold. Okay. Now, gold is going down. Okay, after reaching the 2,431, gold is coming down. Reason being, okay, it's pretty intriguing, to be honest, because when we talk about war, geopolitical, right, geopolitical events, causing impact on the commodities, it's just for a period of time. Look at Russia and Ukraine. Okay, Russia and Ukraine is still going on, right? They still going through the war, right? They still have those conflicts. But gold is not actually moving anymore because of that. It's gone. For the market, this is gone. It's still happening, but for the market, it's gone. So same with the Israel and Iran. It's gone. It happened last week for 2 weeks. That's it. Done. Finish. Vanish. Right? Why did the market move so much up Why are we nothing had it happening? All right, we can see here all of these here. Okay. Look, it well, I don't want to be rude or nothing like this, but I don't know if you guys know, but central banks now are asked to have 80% of their reserves on assets, right? Central banks. I mean, not public banks. I mean, central banks, Fed, um, RBA, and so on. So what they've done, they bought gold. Okay, buying gold gives you the potential to have an actual asset, and therefore, whatever happens, you can hedge your risk through the futures market. Okay. Now, this is the reason why the gold raised so much. The second reason is, of course, Israel and Iran and all the other things, geopolitical tensions happening around the world. But central banks have used this as a sorry to move the market. Unfortunately, that's the truth. Okay. Again, I don't want to be rude or anything, but that's exactly what I think it is happening at this moment. All right. Now, some important things here. If we look to the gold price, let's get this pen. This was the top. This was the bottom. Oh my goodness. Let me get a horizontal line. So this was the top, and this was the bottom. What had just happened? It broke the bottom. What can possibly happen here? What can possibly happen? Look, we have a box, don't we? Let me do it better. Let me do like this. So if I have this one, and from here to here, here to here, where's the pullback? There we go. So from the top, hi guys. Ooh. Okay. Yeah, that's not gonna work. The major target is at 2,170. Okay. 2,170. This is a major target for myself. Okay. I'm not interested to short it, but if I would, this would be my target because of the box. I've mentioned that already on here. Okay. But still, I'm more confident that gold can pull back down than continue to go up, to be honest. But for that, we would have to break these lows and then break these lows again. Okay, so this one's first, and after breaking that one, we would break this one, and then we have a free area to move down. Okay. Otherwise, it can simply continue to go up to 2,500. That was my main target. All right, that one was my main target at 2,500. But I feel like we're not going through that anymore, and now we're heading back to 2,170, maybe 2,200. Okay. So pretty interesting on that scenario here. Now let's move on to where is it? This one. Same happening with WTI, okay? The Western Texas oil, crude oil. Going to 82,500 right now. Look, it's very hard to say where this can possibly go as we are very indecisive on the commodity market at the moment, okay? But I'm do expecting more push highs for the oil. So Sorry, guys. Moving ahead, do you guys have anything that would specifically like me to cover? No? Okay. So that's pretty much it that I have. What happens if we get mixed figures in employment claim and GDP? Oh, that's a really good question, actually. Um, we have a question in and so on. Euro GBP. I've just talked about Euro GBP. What happens if we get mixed figures in employment claim and GDP? Look, that's a very good question. First of all, we need to understand that the GDP is the gross domestic product. Okay. And second, is it okay to buy Euro GBP? I'm going to answer this question in a second, just a minute. So first of all, we need to understand that the GDP is the gross domestic product. Okay, it's how much have been produced into the economy from the first quarter of quarter one. It makes sense to be higher than expected because we had all the manufacturing and services PMIs from February and March better than expected. Only the April one that came, January, February, March, better than expected. Only the April one now that was too out of context and it was very bad. Another thing is that last year we had on June. Oh yeah, so I know that. I don't know why they didn't change that yet. But I've mentioned it that my webinar would start at 7 to 8 p.m. today on the YouTube channel. But anyways, that's fine. I can go over Europe for you. So as we were saying, the first quarter have been stated already that they are a possibility to be better than expected from the Fed, right? I'm talking about Jerome Powell have stated these, not me. So there is a possibility of this to come higher than expected. Now, initial jobless claims haven't sounded too well because of the manufacturing and services PMI haven't been sounded too well as well. So when we have less people in manufacturing and less people servicing, then there is a possibility of initial jobless claims come higher than expected. So yes, there is a possibility to come mixed. But in this case, the market will be not looking to the GDP than the actual initial jobless claims for today. Okay, so the market would more take the GDP. Now, Euro pound again, I had a short position on Euro pound since Tuesday. I've closed all of the position already on the price of 89, 86. I think, no, below that here. 85, 900 or something. I had one short here and another short here. The reason I close it, it's because the market wasn't moving anywhere. I was like, oh, it's okay. I got a 3% trade. It's all good. I'm just gonna take the money off. And I took the money off. But now pound is stronger than the euro. Okay. Euro dollar is going up, pound dollar is going up. But remember, it's not because of the euro is strong. It's because of the pound. It's because of the dollar is weaker. But my target was at 86 80, 85, 600. Okay. So this was my target, 85, 600. So yeah, it's already very close to the take profit, I would say. Um, if we go into the daily chart, we've just broken through this range. We went all the way up and now we're all the way back. All right. I don't think there is a possibility to go up. I'm more looking to short positions on here. Okay. That's my personal opinion. All right, guys. So that's pretty much all for me. We went a little bit more than 8 o'clock just to compensate everyone that have been here. Thanks for joining. And sorry for those who didn't know that we would have it, but I've stated on the YouTube channel. So this is the importance of having the ring bell notifications on the YouTube and watching the videos where I talk to everyone in there. Okay. Thank you everyone. Have all a great weekend. Actually, weekend. We finished already the week, so I hope everyone have a good weekend ahead. And if you have any questions, just send me a message on Telegram or put in the comments on the YouTube video, and I will definitely answer. All right, guys. Have a good one, and I see you tomorrow on the YouTube video. See you. Ciao, ciao.